Is it just a dramatic correction, or are we seeing the beginning of the end of the Trump bump when it comes to the stock market? Whatever the answer is, for the second straight trading day, stocks, they went into a nosedive. When the smoke cleared, it was the largest one-day point drop in Wall Street history, erasing all market gains so far in 2018 and more. Another wild day on Wall Street. The Dow Jones Industrial Average taking a nosedive, dropping more than 1,500 points at its low before recovering a bit on Monday afternoon. The S&P 500 and NASDAQ also suffering steep losses. This after capping off its worst week in 2 years last Friday, ending that day down nearly 666 points. But the White House downplaying this steeper drop, maintaining the overall direction of the economy under President Trump is strong, pointing to wage growth and low unemployment levels. In fact, despite the declines, the major averages remain up 28% over the past year.
We have come so far so fast in the stock market. It is not typical that the market would rise 22% in 1 year. In fact, on average, the market goes up about 7% year over year. Is what's happening in corporate America, is what's happening in the economy really justification for how far the stock market has climbed?
So what's behind the sell-off, and when will the markets get back to positive territory? For that, let's bring in Jen Rogers. Jen's the anchor of the Yahoo Finance Show on the final round. She's also the senior producer for Yahoo Finance, whose show Market Movers can be seen each weekday morning on Fios One News. Jen, I appreciate the time.
Great to see you.
Hey, listen, I know going into Friday morning we had been reaching record levels, but the last 2 days had been bad, arguably historically bad. How much fear is it tomorrow when they ring in the markets that this market slide continues into day three?
Well, we will definitely be watching the overseas markets to get an idea of where we're going to open tomorrow. Already we're seeing S&P 500 futures lower right now, and that after this absolutely wild trading day where we saw the biggest point decline ever for the Dow, but definitely want to keep an eye on how overseas markets trade tonight.
You know, Jen, I've been taught always, oh, this volatility index, look at it, but I see the government shut down and the market goes up the following day. Have we just been conditioned wrongly that the VIX is no longer a good indicator, and now we're getting back to some of the same basically indicators that we had leading up to the past year?
I don't think the VIX is a bad indicator. I think a lot of people are still watching it. And just to look where it ended today, the VIX did end above 30. So obviously, the market seems to think there is a return to volatility. We were just conditioned last year that there was no volatility. We saw that through a year that just had a lot of slow gains in there. But that seems to have gone away with these fears right now that we have over rising interest rates, and also with Treasury yields, a 10-year touching a 4-year high. And that just has some investors skittish right now.
So I hear all these different theories as to why. One, fear of inflation, interest rates could go up. Also that there was a trigger at 25,000 where the bigger institutional investors were saying that this was some rapid unwind here with some blind mechanical selling. What happened?
There's a couple camps out there. Definitely seems that there was some algorithmic computer trading. It happened so fast, that trading between about 800 and the low we saw on the Dow down about 1,500. But, we came off of that. That is one good sign for the day. We aren't going to know probably exactly what happened. Maybe the market just had a little bit of a hiccup there. Tomorrow is going to be incredibly important to see what retail investors do. As you said, a lot of the thoughts seem to be that today was a lot of institutions in here. You got to remember, we had an incredible January, so maybe people are in here taking some profits. It was the best start to a year since 1997, coming off of an incredibly good year with 2017. The Dow up 25%, the NASDAQ up 28%. So we have to put a little context here. Sure, our gains from January are gone, but we are still up a lot since the financial crisis.
So, Jen, just put a undefined quotient on this, but the fear factor, how much is there tomorrow here that people don't know where the bottom to this thing is?
You know what? I think that people are, they're not panicking. There was no panic on the floor of the New York Stock Exchange. People might have been heading for the exits a little bit, and they got a little bit gummed up in there at that point when we were down about 1,500, but this is not a panic. People will be watching, though, to see if people buy this dip. If they come in here, do they believe that the global growth story that we have talked so much about is still in play? Look, we are in earnings season, and the fundamentals for a lot of these companies are still coming in really strong. We still have tax reform that needs to play itself out in 2018. So right now, it's not a panic, but it's something to keep your eye on.
And we will, especially if you got a 401k in there. Hey, Jen, I appreciate it. Thank you so much.
Great talking.
And coming up next, fallout and reaction from the release of the Nunes memo. The president, he tries to spike the football and celebrate what he's calling a huge win, but even his key players of his own party see it very differently. We'll review and discuss next.